You've articulated very well that there are ups and there are downs in this trading options. So, what type of money should one set aside, have stacked up before they try to jump in? You have any recommendations on that?
Yeah. So again, the best thing to do is you don't even have to have any money. Start practicing. You want to practice before you put any money at risk. The second thing that you can do is once you finally put money at risk, most people don't understand that options are there to help you and not hurt you. So for an example, I call this my rental income strategy. So if you have a portfolio that has $100,000 of stock in it, depending on if you have 100 share blocks, you can actually sell options against your stock. And so if I got 100,000, let me give you an example. If I got 100, let's say I own Apple shares and I own them at $100, I can sell $115 strike price against my Apple shares. And so someone will pay me up front. Maybe if I own $100,000 worth of shares, I might can bring in $5,000 to $10,000 a month, maybe. And they will pay me and say, if Apple hits 115, you have to give me your shares at 115. No problem. I own them at $100. And so I'm either going to make $15,000 once they call me out, right? So from 100 to 115, I'm going to make 15,000 if they call them away from me. Plus I get to keep the 5 to 10,000 that they pay me up front. But if Apple doesn't hit 115, I get to keep my stock and I get to keep the $5,000 to $10,000 that they pay me up front. We call that rental income. And if we do that every 30 days, once 30 days in, I can sell another 30 days worth of options and bring in 5,000 to 10,000 again, depending on what the option prices are going for. That is a safe way to get into the option games. Is if you have stock, selling options against your stock. But again, here comes fear and greed. Some people be like, well, what if Apple goes to 130? I'm going to miss out on the upside. It's like, be happy you got paid 5,000 to 10,000 up front, and be happy if it goes up and you get paid another 15,000. Right. But some people, but what if it goes to 150? So you got to control that greed again. But that's one of the safe ways to use options to bring in rental income, that you don't really have to worry about losing anything. You get paid money up front. If it goes higher, you make more money. If it goes lower, you're glad you sold that option up front because it lowers your cost. So it's like a win-win situation.
And when you mention using fake money and testing it out, like how does somebody do that?
Yeah. So you can open an account with, let's say, there's two companies that come to mind that have they call them virtual trading accounts. So TD Ameritrade. So if you use Thinkorswim, there's just a button that says live trading account or virtual or simulated. You just hit the button, go over to simulate it. And they're like, how much money do you want to start with? You could put $1 million in there. It doesn't matter. It's fake. I do recommend that people start with an amount that is similar to what they would start with in a real account, because you're trying your best to mimic the real behavior you would take. If you start with $1 million in the account, you're like, I'll buy some Amazon, I'll buy some Apple. But the reality is you wouldn't really buy Amazon or Tesla if you don't have that type of money. So you just hit the simulated button and then boom, now you can go in and start to practice. What happens if I own the stock and sell the option against it? What happens if I buy a put option? How does that affect me when the market drops? So you could open one with TD Ameritrade, and there's also TradeStation. You can open an account with TradeStation. They have a virtual account as well. There may be others, but those are the two that we typically kind of refer our students to.
You've said that it took you some time to learn this. You dug in, researched, learned the game. So for somebody who's like, yeah, I think I want to give this a go, realistically, how much time do they need to be ready to put in before they really get a good grasp on how this goes?
So everything as far as time is going to be related to your goals. If you're just like, look, I want to have some protection when the market sells off against me, then it's like you only need to learn one strategy, and that's when to buy a put, at what strike price, and for how long. So you might only need to, now we teach like 27 different strategies, because you can do all these different combinations, which is what hedge funds do. But you might only need that one strategy. So it might take you 30 days, it might take you 2 weeks just to learn that one strategy. But if the market changes and that one strategy doesn't work anymore, it might be time to come back to the table and learn a new strategy. So it really depends on what you're trying to do and how much you're trying to actively manage your account. What I love about it is you don't have to quit your job. You don't have to stop your business. You might just need to learn one or two strategies. Number one is how to make money or protect your account from it falling. I think everyone should at least know that one. And then the other ones is like, okay, how can I get a little bit better return on my account or return on my investment? So I think from a time perspective, 2 weeks to 30 days to learn at least one to two strategies. After that, it just really depends on how much time you want to put into it.
So I know a lot of your students are people who have 9 to 5. So how are they finding the time to do it plus their 9 to 5? What's your advice there?
So a lot of our trades, a lot of the trades that we do are like, we call them 30, 60, 90-day trades. So we don't expect them to mature for, 1 to 3 months. So it allows you to still work your job because there's not something to do every single day unless you're trying to go into like day trading or like super swing trading. Like the market's up this week, let me do something. It's down this week, let me do something. But typically we're doing 30, 60, 90-day trades. And so we look for those trades every week for like 2 hours. And once we put that work in for 2 hours, we're pretty much done for the rest of the week. We're just waiting to see if our analysis plays out or not, and if we want to take an entry or exit. I used to battle with like, I should be looking at the market every day. I should be giving my students a video every single day. But then I was like, well, why? That's not what I do every single day. And I don't want to build a lifestyle where I'm in front of the computer every single day from 9:30 to 4 watching the market. And so we build a strategy and look for trades that'll plan out 30, 60, 90 days. We place the trade, we set our alert on the top end and the bottom end, and then we let the trade do what it's supposed to do. So you can go off and have the freedom. You don't really want to build another job. People say, I want to trade full time. And I say, no, you don't. No, you don't. Like, you're just going to have another job. You're sitting in front of the computer, watching colors blink on the screen all day, and you don't control whether they go up or down or not anyway. So why are you staring at it all day?
Good stuff. Now, your program is called Power Trades University. Again, you can go to hisandhermoney.com/power trades. Tell everybody what all goes down at Power Trades University.
So we brand it as courses, coaching, and community. Because like you said, what do people need to get started? Well, they need the courses to actually understand what we're talking about. What is this industry? What are options, calls, puts? How do they work? And so we have the courses. Then we have the coaching, which is where I look for trades live every week for 2 hours with my real money, stuff I would buy, stuff I would sell, how I would manage my trade. Because it's one thing to take the course, but then it's like, how does this apply in the real world? And so we try to show real time, like, here's a situation where I would grab a put. They raise interest rates. The market's bearish right now. Here's the level we think we're going to fall to. Here's the option we're looking at. Here's what we plan to make on it. And so real time, we're looking for it. And then you get to ask questions. So there's the community aspect. You get to ask questions live on the webinar or on the training, or you can ask questions inside the community forum of me or anyone from my team, as well as hundreds of other traders that know what they're doing, as well as new people in there as well. And so that's how it goes down. You learn it, you see us do it or do it with us, and then you ask questions to understand. And then ideally, the goal is to see your account grow. And at least if it doesn't grow, to see you lose less money than you would have lost not learning how to use options for insurance.